All right.
We're
Are we
recording.
recording?
Yeah.
Okay. So hello, everyone. Chris here. I'm going to talk today a little bit about credit repair, which is not something that every lender does. And when I want to be careful when I say that, because when I say credit repair, I'm not talking about engaging in the same type of work that a credit repair specialist would do. I'm not in business. I don't make money. I don't charge, nothing like that. And neither does our bank. However, I've been looking at credit for enough years now that number one, I can tell what's wrong with someone's credit. And then I can also tell whether or not it can be fixed in like a short amount of time. So like, here's a great example. And I want to tell you about a tool that we have at our bank that not every banker or loan officer or lender is either going to A, use, or B, even take the time out to use, because it's more time, it's more energy, and it doesn't necessarily mean that the lender is going to get a deal out of it. So it's just very much a customer service tool more than anything, and a value add proposition that I'm able to make to the people we all work with together. So we have a credit simulator. Obviously, we're pulling credit to run a mortgage application. So we already have their credit report pulled. However, we have a simulator, and we can pull their credit report up on that simulator, and we can manipulate their credit report. And what it will do is it'll give us the current credit score. So if we pull up TransUnion and the TransUnion credit score is 600, then it'll give us all the information that TransUnion is reporting that is giving them that 600 credit score. So let's say that they have 2 credit cards. I look through their credit looks squeaky clean. They really haven't done anything bad. There's no late payments. There's no collections. And really all they have is a couple credit cards. And let's say their credit card balances are almost at the limit. So say they have 2 credit cards with $1,000 limit on each credit card, but their balances are hovering around 90% of the limit. So like maybe the balance on one credit card is $873, and the balance on the other card is $998. So $2 shy of the limit, right? I can go in, I can click into the balance field, and I can change their $998 balance. I can change it to $10. And then their credit score will change immediately when I change it. So I did that twice today. So let me tell you some really cool ways to help your buyers think differently about buying with credit score dilemmas in the way. So I had 2 particular buyers just today, that I ran credit simulators for. One of them is trying to refinance out of an FHA loan so that he can use his FHA again. So when you use your FHA, or when you use FHA loan, you can't get a second FHA loan
While you have the first one.
And while you have another one out, except for, and we can do this on next week's Finance Minute with Chris thing, whatever. You can have 2 FHA loans at the same time, but the current home you own has to have 25% or more equity in it. And then you have to prove that the family size has grown and outgrown the property. That's the only time you can have 2 FHA loans out at the same time. Your existing home has 25% or more equity in it, and that will be proven by an appraisal. And then you have to show that, oh, there's 2 more children in this family now, and they don't fit in this house anymore. So they've outgrown it. They got to buy another house. That's really that. We'll leave it at that for now. We can talk more about that later. But anyhow, this guy's stuck. He's got an FHA loan. He does not have 25% equity. His family size has grown a little bit, but I need to get him refinanced out of it and onto conventional so he can buy a home that he's under contract on with a builder. Now, we have a little bit of time, but I'm out of options. So I don't have any other options. So what I did is I had a call with him this morning. I said, man, the end of the day, we just need to get your score up, because that's why you keep having to go FHA, because your score is where it's at and it's preventing you from even using conventional. So I got with one of my team members just before this call. We jumped on the credit simulator and we got his credit score from a 652 up to a 685. And the credit simulator will even let me change the time frame. So what if this individual pays their credit card balances down and then waits 60 days? Because the more time you wait after you've done good things to your credit report, the higher your credit score keeps going up. So I'm not just limited with that tool to the here and now. I can stretch it out all the way 1 year and say, hey, if we wait 1 year, pay off these 3 collections, pay down these 2 credit card balances, leave it, wait 12 months, their score goes up 100 points, maybe, or something like that. So that was scenario number 1. The second scenario I had today was a guy who's trying to buy a property and he wants to be in the $180,000 range. We pre-approved him for $140,000. And I called and had a conversation with him. He was very disappointed. So you'd think most people would be very excited about getting pre-approved. Not all the time. I think you know that. Because it fell short of his expectation. So he's wanting to shop in the 180 range. So I called and I told him the only reason he's limited to 140 is because his credit score is dragging down how high I can raise his debt to income ratio. So when you have better credit, you can have a higher debt to income ratio because you look more responsible. If you have a lower credit and it's not very good, you don't get to have a very high debt to income ratio. And your debt to income ratio drives how much house you can buy. So the approval amount is driven by your debt to income ratio. So I told him, if we can get your credit above a 660, then I can raise the debt to income ratio ceiling and probably get you up there into that 180. So we ran a simulator on him this morning, got his credit score up to mid 660s within 60 days. And now I can get him approved between 180 and 200,000. So game changer. So he could have just taken that pre-approval and said, I'm discouraged and this totally failed to meet my expectations and I don't really want to buy a house anymore now.
So how much money
and the only thing that needed to change was that conversation and the outcome. And now he's going to be excited.
So how much money was he having to pay off to change that?
$1,900.
So not a ton. I mean, it's not pocket change, but it's not a kidney.
Right. Yep.
So, okay.
The other individual has to pay about $5,000 in credit card balances, $5,000 down in credit card balances. So yeah, it can take money like that, but I've done the same simulators on other home buyers where they didn't need 5,000 or even 1,900. Maybe they need 300.
Right.
It just depends. It's all over the board.
I mean, you've used that when you've done our loans. It was, then we just had to prove that we had paid the stuff down or done whatever we needed to pay off.
Yep.
In order to get, it wasn't even a matter of getting qualified, but it was getting qualified at the best rate.
Or what? Yeah. Yeah.
Because, you don't mind paying even a few $1,000s if it's going to save you
tens of thousands.
Yeah. I mean, even a couple $100s a month at that point, depending on what the rate differences are.
So I think those two scenarios are very fascinating because they're both pre-approved buyers, but they're stuck. So
they're just not getting what they want.
Right.
Yep.
And I would think that you guys run into that all day, every day, trying to overcome something that a client wants that you can't get them. And not all the time, but I would say a decent amount of the time, it could just be a finance tweak. Something's going on in the finance arena that could change the game.
I talked to a lady earlier this week. She came in on a Facebook ad that I had ran, and she just point blank asked me, what do I have to have in order to qualify for this? And I know what the numbers look like. as far as a score, but I don't know how much debt she has or recent collections or anything like that. So I said, this is kind of the base level of what you have to have. Do you know what your credit score is? And she says, well, I'll tell you what, I was referred by another agent to a different lender and they ran my credit, and that lender never even reached out to me and told me that I didn't qualify. They just told the agent that I didn't qualify and to go on and find the next buyer.
Oh, wow.
And I said, so do you have any idea why you don't qualify? And she said, no, they never sat and went through anything with me on how to improve what my situation looks like in order to get me into a house this year, because that's on her list of things that she wants to accomplish this year. So it's a matter of making sure as agents, we're working with lenders that will take the time to do these things and have the tools to help out our buyers, because that's going to be memorable and going to get raving reviews and repeat clients for us.
Yeah. Well, and not only that, but I can't tell you how many times that either I myself or my managing partner in our branch, we've gotten a number of home buyers approved that were totally denied right out of the gate. Like their credit was too low. The automated approval kicked it out. It was flat out denied, couldn't be manually underwritten, like no options. And we would just jump into, or we will jump into our simulator if we can see, oh, wait a minute, it looks like a couple things could possibly be tweaked here and make a big difference.
You just did that for Ashley's and we got them closed.
Right.
Yep.
Yeah. Yeah. And the cool thing about that simulator is whatever the score. So take that one example I gave you from today already, where if the client pays $5,000 down, his scores are going to go up into the 680s. Once he pays down those credit card balances, he has to wait for his statement, not his monthly statement. He has to wait for his online account to update. So the balance needs to update. The tricky thing is that we need something official. We need an updated statement showing the new balance, and it can't be a screenshot because you can't do screenshots in our business. So it can be a little bit of a pain, but ultimately we just need an updated statement balance. And then we can have that new credit score in 3 to 5 business days. So that's how fast someone could be denied and go pay down some credit card debt, and we could have them approved within 2 weeks.
So that's what we
Like
did.
night and day.
We wound up having to call like Capital One and USAA and those guys and just get verification. A lot of times they don't want to email over things to you, especially USAA. They're super ridiculous as far as making sure that nothing's fraudulent. They want to fax you something or snail mail it. So sometimes those things take a little longer, and it can be frustrating because like with ours, we have so many things that are just constantly hitting every month that are just set up on auto pay, coaching and Zillow and things like that. And so we were constantly having to kind of chase getting that, if you remember.
I do.
But yeah, that's what we have to do.
I remember
so
all paperwork chases, Leslie.
Yeah.
Gosh.
It was too easy if you don't remember it. So
we all did a victory dance at the end of the line. I can tell you that
I
right
think it
now.
was a victory cocktail and a cigar.
Yeah, it was something like that. Yeah, which I'm okay with as long as it ends that way.
Right.
But this guy today he's a real estate agent. So this is for his personal home, and so he's in this business. And he mentioned to me this morning. I said, "Well, I've got a simulator. Let me play with some numbers." And then his response to that was, "Really? You can do something like that?" I said, "Yep, I can." And most lenders probably won't, because again, it's like Leslie said, it takes more time. You got to take more time. You got to call a client that's denied, that is possibly not going to put any money in your pocket or your bank's pocket. You don't know, so it really comes down to
they're too short-sighted and not thinking about a longer play for their
game.
business.
Yeah. So I'm not the only one, but just keep that in mind. That's not a majority play for most lenders, but we do in our office, and we want to, we can make someone a homeowner and we can make you look good as our agent partners. We're going to bring every tool we can to the table for it. So
Amanda, Kelly, you guys have any questions about any of that?
No, that's pretty straightforward.
That's pretty straightforward.
What's the lowest credit score you can work with? Like,
well, like,
is that a loaded question?
well, it's kind of a, there's two answers to, or there's two sides to the coin. So FHA and VA will go down to 580. However, and I haven't looked at the latest guidelines, but like, I know that last year, and I don't see this that often, but last year, I had a couple buyers come through who had a pile of cash, and they had like 530 to 560 credit, and we got them approved because FHA would allow it with a 30 to 40% down payment. It was like a significant down payment, maybe even more, 50 in one of those cases. But I don't know the latest, like, you know, drop bottom if someone's in that scenario.
And what's conventional usually start at?
Well, that's the thing, is conventional's gotten really strict. I mean, conventional will go down to, I mean, some banks will even put 620 out there, but it's putting the guidelines out there is one thing, and then reality in our business is another thing. So even though you might see that lower credit score, I would tell you, and I would tell any home buyer listening in here, if you don't have a 680 credit score these days and you try to go conventional, maybe it might go through. Slim chance. But the rules and regulations have gotten more strict since COVID, and then since the Fed started increasing the interest rates. So those two things have tightened down on credit. And so does that answer your question? It's not black and white,
Clear as mud.
Amanda. It's a gray answer. I'm sorry. Send them to me and I'll just let them know and let you know.
And let them know what they need to do to get their score up.
Yeah. If they have, just to end this whole segment on credit repair or credit, and keep in mind, I don't do these fixes. I just make
You give them a credit
recommendations.
evaluation.
Yeah, make recommendations and they go fix their own credit. You know,
Right.
I'm not doing that. But the one thing that's not easy to deal with is like late pays. I can't make, if someone shows they were 90 days past due on their current mortgage, there's nothing I can do about that. I can't tell them to go pay $500 down on your Visa card.
Right.
You know, that's
Or if they're
something
fresh
they
out of
can do to
bankruptcy or-
control their credit, but they're not going to be able to just go erase 90-day lates. They would have to get a hold of the institution and argue and make some case that they were wrong and in error and have them correct it, or have that institution correct their credit report. So that doesn't happen very often.
Right.
So, yep.
All right. Anybody else? Going once, going twice.
We're done.
All right.
Go get more.
Thanks for tuning in, guys.
Thanks.
I'll let you
for,
know, Amanda, I'll let you know on that, on those people.
Okay.